Hello everyone, welcome back to Veritalogic. Today we're diving into some exciting news from the world of commodities and global economics. Our main story comes from an article published on MarketWatch today. For those of you who are new here, I'm Sam, your host for YouTube Talks, and I'm currently pursuing a PhD in economics. And yes, I've survived not one but two business schools. Well, if you love economics and business, you're in the right spot. Smash that subscribe button, give us a thumbs up, and drop a comment, and let's dive in. China's recent bailout measures have sparked a significant rally in commodity prices, with oil, silver, and copper leading the charge. But what does this mean for the global economy? Well, let's break it down. On Tuesday, Pan Gongcheng, the governor of the People's Bank of China, announced a series of aggressive measures aimed at boosting economic growth. These include cutting short-term interest rates and reducing the reserve requirements for banks. Additionally, there's substantial support for the housing sector and the equity market. Strategists Krishna and Marco from Evercore ISI described these measures as unusually aggressive and comprehensive. They see it as much-needed response to the recent slump in Chinese bond yields and weak equities. The central bank's approach includes a wide range of measures to support real estate demand and allow non-bank investors to access central bank finance against collateral. This highlights the serious and complex challenges that China faces, including cyclical, structural, and balance sheet issues. Following the announcement, China's stock market saw its biggest climb in over 2 years, and prices of many industrial commodities surged. Stefan Inns from SPI Asset Management noted that these measures, combined with the Fed's recent rate cut, have created a reflectionary environment that's lifting commodities, equities, and pro-cyclical currencies. The stimulus measures have also pushed global shares to new peaks, boosting commodities across the board. The Bloomberg Commodity Index rose by 1.2%, topping 100 for the first time since mid-July. Silver prices jumped 4.3% to their highest level since December 2012, and copper prices saw their strongest daily rise since May. So is the Chinese bailout going to stabilize the world economy? It's too early to tell, but for sure it boosts investor confidence. Short stock rally ahead. While China's stimulus has certainly lit a fire under the commodities market, the global economic outlook still holds some uncertainties. Analysts caution that we need to see concrete evidence of these measures working before a sustained rally in global equities or commodities can take hold. Additionally, geopolitical risks, deglobalization, and energy transitions pose long-term challenges. Stefan Inns also pointed out that despite the positive market reaction, the real game changer might be a stimulus check, similar to the U.S. COVID relief. For a long-lasting rally, both the U.S. and China need to ensure economic stability. If the U.S. achieves a soft landing and China revives its housing market, we could see a full-blown bullish commodities cycle. Well, everyone, thanks for watching. And if you found this video helpful, don't forget to like, comment, and subscribe for more updates on global economic trends. See you next time. And please remember, all stocks numbers are subject to change.